It's time for your Wednesday Wisdom with the Einstein of Wall Street. Hi, Peter.
Hello, Olivia. How are you today?
Well, you're just bright-eyed and bushy-tailed today.
I am. It's a beautiful Wednesday. How are you?
I'm well, thank you. Hey, lots of news, especially in the New York Stock Exchange. Read in the Wall Street Journal that the New York Stock Exchange is lowering fees for companies that have little to no revenue. That's following some provocative IPOs like Lyft and Uber. Do you think that's a sign that they want to maybe get some biotech IPOs in instead of the NASDAQ?
You know what? I really don't know. It's not. Look, the business model of the stock exchange is to really get as many companies to go public here. We do an incredible job with IPOs, way better than any of the other venues. You know, the business model also is there's a rebate and pay model, which means that when you send your order flow to the stock exchange, depending on as opposed to other venues, the business model is a little bit different. In answer to your question, I don't know the answer to that, really.
Yeah, well, you mentioned before that IPOs are going to be really hot this year. I was just wondering if maybe there's some sort of sector that you guys are looking out for.
You know, it's curious. Most of the time, we don't get the tech names, right? Those go to NASDAQ. I'm not clear why. All I know is that we've had a good year for IPOs here, okay? Look, in general, the 2014 and 15 and 16 were really great for IPOs, in the industry. Then we had 17 and 18, really, they were not particularly cooperative in the marketplace per se. And then we had the government shutdown, and there was that pause and interruption of it. But basically, it's a matter of, there's the high revenue business model, which is sort of a curious one, even though these companies, a lot of them are not making money. But we've seen back to back, yes, Lyft was not successful. Uber, in my opinion, was a successful IPO. Beyond Meat away from us was a really good one, it seems. Everything we've had here on the floor. I think the human factor is a big factor. Transparency is a big factor. The market-making firms here have been super solid. There has been some negative narrative about the way IPOs have been received. I don't go for that side of it. I think Morgan Stanley did a great job. Citadel did a great job. So I don't think, there's that shoulda, woulda, coulda. You don't know. The whole point of the whole IPO is when companies go public and bring it to the public, there's always the risk. There's always the wild card in it. So I don't tend to look back. I kind of look forward.
Well, we are certainly busy here at the New York Stock Exchange today, and we're going to see those changes starting in June, welcoming maybe some different kinds of IPOs. Hey, Peter, new consumer confidence information came out, and it showed that it was higher than expected in May. However, it was higher for Americans over the age of 55, and actually Americans under the age of 35, it lowered. What do you think that's about? That be politics?
You know what? I'm still not clear on those numbers at all. I think we should really look at it, how it's affecting the market. Let's take that question you just asked and relate it to today's market. What I think is happening is I really think there's a little bit of an erosion of confidence over the last couple of weeks in the market because of the fact that, people are watching that if they're buying stocks for the fundamentals, and you have a market and a sort of incoherent policies coming out of Washington that can completely throw this market into a tailspin on one tweet or one headline, that's going to make people step away and watch for a little while, right? So until we thought that the old... I was talking about decimation, but the old delivery of information used to be on a much more coherent basis, right? We'd have press conferences, things were thought out a little more. So I think we're seeing a little bit of a breakdown in the market. With me, I don't say that down 200, down 300, up 400 makes a market in a day, but I'm just getting a sense that the market is breaking down a little bit because we don't have anything to put our teeth into on the China problem. We've got so much craziness going on around the world with North Korea, with Iran, with Brexit and whatnot. And I think the incoherency coming out of Washington is really eroding a little bit of confidence. So whether it's the 35-year-olds, the 55-year-olds, I think we're going to see a little bit pause in the market. That's my gut.
And we are seeing that today as Mueller is stepping down. And thank you for directing that to the stock market because, hey, that's why we're watching and listening to some Wednesday Wisdom with Peter.
Up on that.
Thank you so much, my friend.
Pleasure, guys.